Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, June 22nd. Just as a heads up, next week I will be doing this live from South Carolina. I might have a couple guests with me, but we'll run this live next week, and Keith will take care of the Tuesday night trade findings and adjustments. As a hint, the trade finding and adjustment for tomorrow will most likely be an Apple 380 January 22 or a September 2022 380 leap long call. With the upgrade on Apple today that sparked our market higher, I think it was Morgan Stanley upgraded 400 as the price target. We'll probably hit that in a matter of months. So last week, in fact, I'm going to apologize. I'm probably going to have a quicker than usual one today. With that said, it was asked, and on Thursday is going to be a question and answer session. So between now and Thursday morning, I would like you to get all those questions you've always wanted to ask someone about stock market, about trading, about results, about returns. And I would love for you just to plain and simply decide, get your questions answered. Give me the hard questions. Give me the questions that you're going, hey, no one else answers these for me. I want an answer. That's what next Thursday is going to be. I received quite a few emails that basically said, hey, that was interesting. I haven't had an opportunity to just ask questions like that in forever. So pretty unique opportunity. Make sure you have those questions ready for me. So last week, up another 1.9%, following the trend. Pretty excited to see retail sales, which surpassed even the most optimistic expectations. And of course, we had what was termed a cheap and effective treatment for COVID. In all honesty, I didn't hear much about the $1 trillion for infrastructure spending. I can tell you definitely the U.S. could use it. Interesting comment here. Mounting COVID cases in Florida, Texas, and Beijing, however, torpedoed investor confidence midweek and kept the S&P 500 from breaching the 78.6% retracement. Out of curiosity, when was the last time someone used a 78.6% retracement? I don't know. I sit there and I wonder, when was the last time that, geez, a 78.6 retracement? Really? Has anyone heard of that retracement? Please say yes or no if you want to. I know if you go Elliott wave, you have like a 16.8, a 32, a 50, a 68, what, an 84, and then 100? Has anybody heard of a 78.6? Yeah, Maud said she's heard of Fibonacci's. Lance uses Elliott waves. It's not in the Elliott waves. I really struggled with that one. I sat there and I'm like, where did that come from? It's like when I hear someone talk to me about the 100-day, the S&P 100-day simple moving average. No one uses or trades off a 100-day simple moving average. It's just, it's unheard of. And that kind of brought me to what I want to go through with you in all reality for today. The easiest way to state it is beware of the that's out there. All right. There's the simple point of view. Beware the bull, the BS that's out there. And it's interesting. I have someone, he's not here tonight, but every so often I've got someone that sends me, hey, Kevin, what do you think about this guy? You know, this is what I got. And I go through and I do a broker check on him. I go through and I do a FINRA check. And basically, most of the time, we find out they're full of crap. Have a ton of complaints, have issues with them. And plain and simple, there is so much garbage that's out there that you guys really, you need to be careful. The best way I can put it is be careful. And I would take 3 steps, right? 3-step process to see if someone is full of it, right? Step 1, open your account and let's see the trading history and results. I love this one because I have heard every excuse under the sun about, well, I can't do that. I can't show that. Bull crap. In all reality, the SEC, Securities and Exchange Commission, wants people to show real accounts, real success stories, real trades. Anytime you hear someone say, well, I can't show that, there's your first, hey, you're getting fed a line of BS. Plain and simple. It's that easy. Don't let them send you some kind of trade record or trade history. Tell them to open up the account. Show it to me live. If they're going to take your money for anything, they should be able to prove they are who they are and that they can do what they said they can do. In some way, shape, or form, have them show it. Now, I'm going to be so far as to say, or I hear this all the time, you know, right now, plain and simple, the S&P is down 3.55%. 1 year change, it's up 5.62%. That is the S&P 500. Those are the gains. So if I was to bring up the no Parker, right, we're sitting up $436,000 right now on what, 12.5 million. So that was 12.1. We're at about a 3.34% return, beating the market by 6%. It does not mean that every account is. This is a whole. This is where we're at. We have a Coda investment. That's what Keeb's doing, right? Keeb at Coda Investment looks like he's up 225 on 4.3. Dang it, I think that fetcher's going to beat me. I think he's going to don't tell Keeb I said this, but yeah, he's probably going to make me look pretty foolish. Divided by, so we have what, 4. He's up 5%. He's got me beat year to date, but I still have the rest of the year to go. So pretty interesting that plain and simple, anytime you see something, you hear something, hey, is it too good to be true? Have them show it to you. Have them pull it up. Have them see if it's real. You could then go up through all accounts, a little bit interesting. All accounts is more of like, 401k. It's just what I named all the other ones. And we're up on that one, 524, 528 on that one. So that one, 14 on 14, 528 on 14 million on 3.77. So Keeve has 401k beat. Keeve has other stuff beat. It's just the way it is. It's real life. It's real accounts. And again, if you're going to spend any money with anybody, it's only fair that they prove who they are. Number 2, I'm just going to call it fact check them. And what I mean by that, you could do a broker check. You could call the SEC for verified results. You can ask for audited results. Check online history about the individual / company. Better Business Bureau. Do a BBB check. See if there are any complaints. There is so much you can now do to check the history to see if someone's full of it or not. It just takes time. And whether it's education or real life, a stock picker or not, this is what it comes down to. And then the best thing I can tell you is listen to them. Is it too far-fetched to believe? Is it logical? Does it make sense for you? There are all these things you can do to find out if it's what you want for your money. In all honesty, you hear us say it all the time. Make your money work harder than you do. You deserve it. With that said, by the way, the second full week of July 5th through the 12th, I think it's a Sunday through Saturday, the Hurley Investments group is going to take that week off. We're going to try to upload or pre-record some things and get it uploaded. But that's a week when, believe it or not, most of us are going to have a little time away. So Jeff, Jeffrey T. Smith, Keeve, and myself, we're going to kind of rotate watching the markets, but we're all going to take that week off. So look for pre-record on My Hurley Investments. But this is the simple check. And this is where you need to see if it's going to be a good fit for you. If the style is going to be a good fit. If they give you the warnings that you can live with so they can prove themselves. There's a lot here that you wonder about. I see Dr. Gupta's here today. Boy, one of his accounts, I probably can show a 15 to 20% return in it. Then he's got another account that doesn't look so good. We're still waiting for some things in that account to come back. It's interesting because he sent me an email, great month, and it was nothing more than dollar cost averaging and picking up more shares. So when things finally moved, he had a couple of accounts that exploded. It's that understanding. It doesn't hurt you guys. Since most of you have come from education, since most of you have taken education, since most of you have been burned by education, it's not hard to sit and think and do the addition and subtraction in your head. The process of trading is easy. If it seems too complicated, then it really is kind of a joke. It's someone's made up belief of what they think they can do. It's really neat that it's really neat to see the results of protecting stock ownership, of dollar cost averaging long puts, of seeing 2 to 3 out of 10 positions come back, and you having 7 more that you can really knock it out of the park with. This is the beauty and the success of trading. You've got to be careful that you don't get lured away into something that will cost you all of your retirement, that will cost you everything that you've worked so hard for sometimes years, sometimes decades, sometimes through your career. Keep it simple, stupid. It's a foolish mantra, the KISS principle. But if you can keep it simple, stupid, if you can very easily explain it to people, if you have 8 years, 10 years, 12 years of garbage out there on the internet, that's where I think that's what speaks volumes versus hearing it's Morgan Stanley. It's Vanguard, the cheapest one on the market. It's Goldman Sachs, we're here to help you. It's Charles Schwab, we're going to give you your fees back, or we won't charge you any fees, or whatever garbage they come up with. It's funny because they make their money on commissions. The fees 1%, they probably make 3.5% yearly on churning you through mutual funds. That's the problem with our industry. Our industry holds no integrity, and it's not honest. It just isn't. The game is to capture your assets. It's not to have them grow. The game is to tell you a lie to have your stuff stay there, to turn it into 2 or 3 different funds for more commissions versus helping you create money and wealth for future posterity and yourself. It's just, it bothers me to see so much garbage out there. So, plain and simple, if you ask me where we're going to go, it all comes down to the charts, and it's pretty interesting because I'm torn. Little bearish movement, and the Dow cannot seem to get over the 200. I kind of think the Dow will most likely be down for the week, right? If you were to talk to me about the S&P, it's building a base. It's building a base. It's up above the 200-day. I think the S&P would be bullish. Now, not wildly bullish. We're trading at, and it looks like with my eyes that don't have my glasses on, it looks like 31.17 probably will go up and test a 32.33. Will not get above the R resistance 2 pivot point at 32.61. Actually, it's having a little bit of problem getting above the first resistance level of 31.53. But building a base, it'll be interesting to see where the S&P goes, but I would most likely tell you the S&P will probably go higher. Sorry about that. The S&P will most likely go higher into the end of the week. And then the NASDAQ, we look at this one, it's already testing those highs. I think this one's going to be flat. It's got to test, it's got to break above it. It's got to go through enough buy orders to get there. So mixed bag on this week's indexes. Where will the S&P end June 2020? I'm still saying flat. Most of you will look at me and go, but Kevin, we're up right now. In all honesty, it'll be the first main quarter where you're going to have some rebalancing here, most likely next week. Next week is also a holiday week with the 4th of July. Friday, the market is closed. So you're going to see some rebalancing that will occur Monday or Tuesday. Next week is a week where you don't trade. You just sit back and relax. You let the market go and do what it's going to do. I do think we'll go back and we'll test and most likely be flat for June. Earnings, there's not a whole lot of earnings. Winnebago, BlackBerry, Fuller Homes, KB Homes, Thursday, Nike. A lot of people say RAD. You mean Rite Aid? And it's called RAD, but yes, Rite Aid. I pay attention to Rite Aid to see where we're at for the Boots Alliance, WBA. It also helps me for CVS. Darden Restaurants on Thursday for you Olive Garden, Red Lobster people. Be interesting to see how those go. Economic reports, Thursday is the day. Durable goods, GDP. Followed up Friday with personal income and personal spending. The expectations are borderline god awful. Durable goods are expecting an 11.6. I'm not sure I see that for year-over-year growth. It could be month-over-month growth. Durable goods ex transportation only 2.0. GDP is supposed to be down negative 5.0. Awful. Absolutely awful. I'm not sure what we're going to see by way of market movement, because I guess it's expected, but sometimes the shock still takes people by surprise. This week, the ECB has their monetary policy meeting. See if they change rates, see if they're going to buy bonds. Pretty interesting if you go back and through the pulse up here that I have. Retail sales is great. Where is it though? Somewhere in here it talks about the fact that the Fed will start to buy corporate bonds, which I doubt they're going to buy any Hertz. They may buy some airline bonds though. If you see some big bond sales going out there, that's what's happening. You're going to see the Fed start to back companies now. I mean, in essence, we're going to turn into Japan. We'll probably go through a bunch of years where, in all honesty, you've got to be a stock picker because the indexes will be flat for decades. Yes, we are taking some profits on Leap and adjusting farther out in time. Wish I could spell farther better. That's farther. Farther. Still can't spell. There we go. Farther out in time. We are still trying to enjoy the run up until July earnings. Most of that is happening in NASDAQ companies. When I say NASDAQ, I found a very interesting article on Baidu. If anyone wants to know why we're in Baidu, it comes down to the title, Baidu is cheap all the way around. Excellent opportunity to read Baidu and the different revenue streams that it has. What an amazing opportunity this stock has to reclaim $288 per share. When you think of Baidu at $288 per share, it right now is trading in the 120s, low 120s. Huge opportunity. And Baidu, if you can look towards the future, trading at 123.08. By the way, since we're here, this has nothing to do with nothing. Just notice that we have some 210 call verticals here. A 210, 350. That's $140 that they're going to make. cost basis of $2.69. I think when you do your math and divide 269 divided by the 140 they're going to make, it's like a 5,265% return. Just want to toot my own horn and say, yes, it is possible to get a 5,200% return. Some people, again, are still at that 100% return. The new trade, September 2020, LEAP calls. You could pay $60.43. Just looking for the upgrade and the run up to, probably to 400. I get there upgraded to a $400 price. Usually when that happens, Apple typically runs there pretty quickly. So it might be interesting to see. As I click on it though, the run and then what we're looking for is just a run up to 400. So to put this into perspective, this is January. We're spending $60 with a realistic expectation, 370. With a delta of 57. So a time decay, we're looking at 55 cents on the dollar on really a $41 move up. So $41, we're looking at a $20.50 return, about a 35% return on tomorrow's quote unquote, on tomorrow's Apple trade. It'll be a good one to see. I'm excited to see where we're going to end up. But great article on Baidu. Please go through and read these articles. I have them out here because they're going to be for your help. I do vet most of what I see here. I like the way they were going. I like where they're at. I back check their numbers. Great opportunity for a great return here on Baidu. I just found this interesting. I don't even know who Daryl Spence is, but I get a couple things. 5 realities of this recession. What really got me was the first number one. We've been here sort of. I like how he rebounded. I like where he pulled his information. I like all the numbers. A very interesting article with 5 points on the recession that we're in. And it's just something for you guys to read about so that you can go through and see if you agree that we're going to have a tailwind in our second half of the year or if things are going to get worse. And I know a lot of people are saying, well, Kevin, that's all dependent on, that's going to be all dependent on the COVID outbreak. And I might agree with you. But the short answer is definitely get your research in on it. Get your research, see what you think, see if you're going to agree with it. There's a lot of information here that I found very interesting. And last but not least, where's my last one? I think I skipped one in here. Maybe not. That is all his stuff. Last but not least, Boeing. Boeing got hit with some bad news. Why they were down 10, 11% in a day. I still do think Boeing is $60 to the high side away from a FAA announcement in the next 4 to 12 weeks. We'll see if they can open up their factories and have the capacity, though, with social distancing to be able to get their planes up and running. With that said, kind of short here tonight. Any questions you guys have for me? Any questions that I can get answered for you that you're saying, hey, would you answer this for me? Would you answer that? Certainly, Maud. Any questions I can get answered for you guys, though, tonight? If I don't see any questions, we're going to call this one a little bit early tonight. Call it the summer doldrums. Call it the heat out west. I'm trying to stall to let anyone answer any questions that you guys may have. I don't see anything. Guys, have a good evening. Pleasure having you here. Again, tomorrow we're going to talk about Apple, a Leap 370 Leap call, and the advantages of doing it in January 2022 versus September 2022. And it'll be your option to jump in with what you want to. Guys, take care. Have a good evening. And I look forward to seeing you tomorrow night. Bye-bye.